Hello, my friends. Welcome on our webinar about Fibonacci levels. I would like to tell you one thing first, that the title of this webinar is how to properly use the Fibonacci levels. So I will not tell you I will explain you Fibonacci's, but we will not focus on theory, like why we use Fibonacci, what are the Fibonacci numbers, golden ratio and stuff. Because today I will talk only about using Fibonacci in trading and how to properly use Fibonacci in trading, and that will be our primary focus today. For those traders who are first time on the webinar with Axiori, I have to introduce myself first, of course. So my name is Tomasz Wisniewski. I'm a professional trader. I'm trading using price action. I'm a swing trader, which means that I'm opening positions which are open from few hours to few weeks even. And I have 12 years of experience in trading, and in that time I did over 500 webinars and seminars across the globe. So without further ado, let's start. But I need to share my screen. Okay, just like this. I'm gonna share my screen with you, my friends. And you should be able to see my platform MetaTrader 4. Already have Fibonacci here, but I just want to tell you first that you have indicators here, and you have indicators here, and you have Fibonacci's. And on the platform, by default to MetaTrader 4, you have 5 Fibonacci tools: retracements, time zones, fan, arcs, and expansion. And in this webinar, I will tell you only about retracements. Why? Because I only use retracements, and in general, in price action, you only use retracements. And actually one retracement in particular, but wait for that. So today we're going to use retracement, and really vast majority of traders, they use Fibonacci retracement in their trading. We can end sharing the screen and time for drawing. As you probably know, I always draw something on the webinar. It's going to be like this as well on this webinar. So, my friends, in general, this is the trend. This is the uptrend, of course, and this is the downtrend. When the downtrend reaches particular low, and you are pretty convinced that it is the low, and that's the start of a downtrend, because previously price was like this. So this is the start of a downtrend and projected end of the downtrend as for now. Not end of the downtrend, but let's say pause of the downtrend. So you would like to measure this new correction that emerges. This is the new correction that emerges. How deep this correction will be? How far can this correction go? So let's say this is 100% of the downtrend. This is whole, 100%. How deep the correction can be? What percentage of the downtrend we can retrace? Okay, can we retrace 10%? Of course we can. Why not? 20, 30, 50, etc. We could measure like this. But we use Fibonacci levels. Why we use Fibonacci levels? Because they work. They are present everywhere, all over the world, like in nature and trading. Why we should use Fibonacci levels? Because even if they don't work, people do believe that they work, and they make them work, which is a self-fulfilling prophecy. Okay, so even if it does not work, like there is no reason or scientific explanation or grounds for them to work, if people who believe in them, they use them, they start to work. Let's imagine, for example, if you believe in the signs from the horoscopes, right? If you believe in horoscopes, if you believe in your signs, like I don't know, you are Scorpio, for example, or Cancer, or any other sign. If, for example, there will be a horoscope which will tell you, okay, don't go out this day if you are Scorpio, because you will die. If you don't believe in it, you don't care, actually, yes. But if vast majority of people do believe in it, like 80% of the people do believe in it, there will be significantly less people on the street, right? Because they will believe in it and they will stay at home. Okay? I mean, it will not make it work that you will die, but you would see that there is a reaction, okay? Because most of the people do believe in that. Or maybe better example is like the horoscope will say that you will have the best day of your life. 70% of the people will believe in this, and they will be simply happy just because they do believe in this, and they will be amazingly happy, and their joy will affect you as well. And then you will see just a bunch of super happy people on the street, and you will suddenly feel also very happy, and you'll be like, oh, well, this horoscope worked. I really feel amazing. I think it's quite. I think it's a better comparison to this self-fulfilling prophecy thing that you may expect with the Fibonacci's. So let me remove it. You have a downtrend, and then price reverses. Let's say, for example, with inverse head and shoulder pattern. Yes? Because why you think that the price has a bottom here or here or here? It has here because you have reasons to believe in that. Inverse head and shoulder pattern, okay? So there is a breakout of the neckline, there is a buy signal. And you want to check how deep this upswing will be. Okay, so the price is falling down from here to here. And we can actually measure, we can project the potential target for the correction. And we use Fibonacci's for this. The key levels of Fibonacci is 23.6. It means that the 23.6% of this downtrend will be retraced. There is 38.2. There is 50, 61.8. And those Fibonacci's we use. Those are the Fibonacci's that are used, most commonly used. So there is a first target, 24.6, 38.2, 50, 61.8. And now let me tell you about those levels. 23.6 is almost always reached, and very rarely it stops the whole correction. It may create a small bounce, but almost always the price goes further. 38.2 is absolute king. 38.2 rules. Very, very often correction retraces 38% of the trend. 50, more or less. 61. 61.8 is also the king, as it can be considered as the last stronghold for the trend. The price can go here, and then trend can be saved. But once the price will break 61.8, we may be sure about the trend reversal, that this downtrend is gone, and that new uptrend started. To sum up, 38.2 works very, very often. 61.8 is the last hope. You have 23.6, which sometimes works, and 50%, which also sometimes works. Okay, how do you trade Fibonacci's? How do you properly trade Fibonacci's? Let me clear that as well. So, you have this downtrend and this inverse head and shoulder pattern. You have a buy signal here, and you want to measure the correction. 23.6, let's say 38.2, 23.6, 50, 61.8. And then the price goes here. Do you sell here? No, you don't. You wait what's going to happen. When you're going to see a bounce like with the double top formation here, you may sell. But you have to be cautious because this level does not work every time. The price goes higher, meets 38.2. And then I told you that this is an amazing Fibonacci level. Do you sell now? No, you don't. You have to wait for the price action, because the price can break this resistance and climb significantly higher easily. You just need to wait for the price action here. So maybe the price will create a shooting star candle. If there is a shooting star candle or a bearish angle thing, or there's going to be a head and shoulder pattern, or any reversal, any sign that this area is working, then you can sell. If there is not, you wait, because the price can go to 50 to 61. So you trade Fibonacci's when you see a reaction on this Fibonacci. That's when you trade Fibonacci's. Another important thing. You have a downtrend. The price goes higher. There is 23.6. There is 38.2. Price goes there, and then you think, oh no, 38.2 is gone. It's gone, it does not work. No, wait, because although Fibo level is one single line, you should treat it more as an area, like let's say 10 pips to the up and down. The same goes here. It's an area. Every reversal that happens around is significant. Okay, so it's not single digit place, it's an area. Another thing, I need to draw it properly. So there is like this, and like this, and like this, and there is this inverse head and shoulder pattern, and there is the neckline. Actually, I'm gonna do like this. And there is this downtrend. And you have 23.6 here and 38.2 here. Are those taken from those? No. 38.2 and 24.6 are taken from the length of the trend. Here's 100%. But sometimes it happens that Fibonacci's are in the same line as previous lows and highs. Okay, and this is amazing that when you have Fibo here and Fibo here, and then you check the history, and it goes in line with previous important support or resistance, you're like, oh, that can work, because there is not only Fibonacci, but there is a historical support or resistance, and that can actually work. And it very often works. When you see a combination, when you see that old Fibonacci, new Fibonacci is in the same place as old support or resistance, it's a really, really good trading occasion. Another thing, last one, then we will go to the charts, is that you have, or maybe because now you may think that Fibonacci work only in the downtrend, but no. When you have uptrend, and then you already have like advanced correction, and then you put Fibonacci from here to here, and then you have 23.6, 38.2, 50, 61. And then you put those lines, and none of them work precisely. Like here, there is no reaction. Okay, let me change the color. Here there is no reaction. Here, there is no reaction whatsoever. Don't think that there will be a reaction here, because clearly this movement does not, this instrument, this particular movement, it does not respect Fibonacci levels. So if it didn't respect 3 of them out of 4, don't try to force it to respect the 4th one, because it may not work. Also, if you will use Fibonacci on a particular instrument, check the historical uptrends or downtrends, check historical trends and corrections, and check if in history this instrument respected Fibonacci's. Because this instrument may not respect Fibonacci's, and you will think, okay, this time will be different. It will respect Fibonacci's. Will it be different, really? I wouldn't say so. So, for example, like, okay, you can clearly see that there was a downtrend here and uptrend here. And from this point, we have a correction. That's pretty clear. There is the low, there is the top. You take Fibonacci's here. If you don't have it here, then insert Fibonacci retracement. Connect the low to the high, and you drop. And then you see, price is now above 38.2. Should you respect it? Well, let's see. Was 23.6 respected? Was here, here, and here. So far, so good. It looks like this level is, that Fibonacci is respected. Was 38.2 respected? Yes. You don't have to create such a wide area. Yes, it was here. Also, does it have support from the previous price movements? Well, hell yes. Resistance, 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 breakout, resistance, breakout, support, and support now. So in this case, you can leave Fibonacci's here and you can use them in your favor. Like, for example, you're going to have an upswing here. You know that the price will meet 2 important resistances. One horizontal one, which is 23.6, which was respected already, and one dynamic one, which is the upper line of the flag, for example. Where I do have Fibos as oh, this is beautiful. This is gold on a weekly chart. This uptrend which lasted from 2015 to 2020. And this correction. Look where this correction stopped. Precisely on 38.2, which had the support from the previous price movements. Look. This is absolutely brilliant. 38.2 on gold is crucial. 23.6. Look at this. Absolutely amazing. Gold respects Fibonacci now very closely. Let's check if silver is doing the same. Is it? No. So should you be bothered? No. Just Fibonacci lines do not. Silver does not respect Fibonacci support here. As you can see, we are bouncing from levels between 38.2 and 50%. Not from 38.2 or 50. Should you be bothered about this? No, just this instrument is not respecting Fibonacci levels. That's it. That's the end of the story. This is some old Fibonacci. Here you can see that if we are witnessing now the start of a downtrend on DAX, where's the first level? First level is not from Fibonacci, is here, and it was reached. Another level from Fibo is here, and 38.2 is here. Actually, like this. Will those levels will be reached? We don't know. Will those levels serve as important supports? We don't know. But what we know is that when the price will drop to 38.2 and will create a bullish reversal pattern, like for example double bottom, we'll know that it's not a coincidence because we are on a crucial support coming from 38.2 and those levels, and that will be an amazing buy signal. And buy signal here, for example, with the potential movement to the sky. Okay? American dollar, Japanese yen. Fibos, it may work, it does not have to work. There is beautiful uptrend and the correction starts here. Maybe 23.6 will work, maybe 38.2. We don't know. We are about to find out. This is nice. Australian dollar to New Zealand dollar. Uptrend and a correction starts here. 23.6, is it respected? Not really. 38.2, is it respected? Oh yes. Bounce here, bounce here. Broken resistance is a broken support is a resistance here. Is 50 respected? Oh yes. You may say it does not touch. Yes, but I told you it's not a single line, it's an area. Will 61.8 be respected? Maybe, because it's supported with the historical levels. So definitely Fibonacci levels are here to stay, to monitor the action on Australian dollar to New Zealand dollar. I think I'm going to finish with this example. Swiss franc to Japanese yen. Downtrend, uptrend starts, and the correction starts. And this correction started, by the way, this is one of the examples that I was showing you. It starts with the head and shoulder, yes? And from this, you measure the correction. And look, 23.6, actually maybe on the orange is not comfortable for you to see. Better. You have a correction from here. 23.6 worked. Not precisely, but around worked. Then after the breakout, worked. And then 38.2 is stopping the correction. And now 23.6 broken support becomes a resistance. And price is moving between 38.2 and 23.6. Beautiful. Would you be able to estimate this support and resistance without Fibo? Maybe you would think like okay, here can be support from those levels, here the support from those levels, maybe, but Fibonacci significantly improves your perception in this case. Upswing, correction, 38.2, 23.6, and remember 38.2 is an ace, works very often. I think I had a nice on American dollar to Mexican peso, for example. Here, uptrend. Where this uptrend and recently we had a correction. Is 38.2 respected? Yes. Was here, breakout, is now. Euro to Mexican peso. Is 38.2 respected? Was. Here, after the breakout, was a resistance. 61.8. Buyers are defending it as a last stronghold for the uptrend. Once it will be broken, there will be a proper downtrend. So my friends, this is a practical approach towards the Fibonacci's. You can follow us on Twitter, where I post a lot of trading occasions. As you can see, even here, October, set up from Fibonacci's. And also remember, yes, it's our Facebook, it's our Twitter, you can find us there. And remember, there's a disclaimer, we're not giving any signals, recommendations, etc. So this is just for educational purposes. Friends, my friends, thanks very much for attending this webinar, and I hope to see you on Tuesday on our next webinar. So thank you very much and have a great weekend.